In the current micro environment, what key risks should debt investors monitor and how should they position their portfolios accordingly?
I think whenever we are looking at, any portfolio allocation, one always has to be forward looking and one always has to see risk to the view. So if we are looking at from next 6 to 12 months perspective, the current view that, let's say, the market would have is that probably, like I explained in the presentation, RBI is likely to keep rates lower for longer and likely to keep liquidity also on the easier on the surplus side. So what will really change this view? What will change this view on the adverse side will probably if inflation picks up because of adverse weather patterns, let's say food inflation starts to go up or growth continues to surprise on the upside, which leads to higher core inflation as well, which leads to RBI reversal much, much faster than what we are expecting right now, which is in the next 6 to 12 months. So the risk to the view is higher growth, or you have some adverse food price shock, which leads to higher inflation on the food side, which leads RBI to reverse its liquidity or monetary policy stance. So that's one risk that the investors have to really account for. Like I said, even if the US India trade deal were to conclude, we do not think it really changes the medium term macro dynamics for India. It doesn't change the medium term growth or inflation outlook. So probably trade deal is not the factor. It does improve the sentiment, it does improve rupee, but it's not really a risk to the trade view or the fixed income view. The risk that we are seeing is probably if growth continues to be at this point of 8% plus kind of levels, which is not the base case for us. Right? The third,
Right.
or only the one also view possible risk is if currency continues to depreciate meaningfully. Probably right now we are not seeing any outflows in equity which are way above trend. But it could happen that you know outflows from equity or from fixed income could accelerate, which could also prevail on the bond market sentiment. But that's something like we discussed previously. We do expect trade deal to ultimately happen in the next 3 months. We think from valuation perspective, rupee is quite attractive. So we do not see that as a base case.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.